To lower your risk, you could diversify your investments. You might be looking for a safe haven investment that will outperform the market. Gold could be an excellent safe haven investment. Gold's price is influenced by supply and demand, just like any other commodity. Hard rock mining produces the majority of the world's gold, but it can also be obtained through placer mining or as a byproduct of copper mining. Gold is mostly used in the jewelry sector, but it is also employed in aircraft, medical, dentistry, and electronics. Gold is also purchased by governments and central banks. The United States currently holds the most gold, followed by Germany and the International Monetary Fund. Private investors are also interested in purchasing gold and consider it an investment. What motivates private investors to invest in gold? Instead of holding cash, you might consider buying gold if you predict a recession, geopolitical uncertainty, inflation, or currency depreciation. It is sometimes held by investors as a hedge against market declines. From 1978 to 1980 and 1999 to 2011, gold saw huge growth in the last 40 years. During the 1990s and after 2011, it struggled. Fears of inflation and recession drove gold to new highs in the 1980s, while a series of events pushed gold prices higher after 1999. Until 2003, the price was held higher by the September 11 attacks and the Iraq conflict. Gold hasn't always been a reliable investment. Due to a growing US GDP, interest rate hikes in 1995, and a stringent budgetary policy, it struggled throughout the 1990s. You now have a better understanding of gold and why people could invest in it. Here's how to get started with gold investing. 1. Invest in physical gold. Gold can be obtained through purchasing gold jewelry, coins, or bullion. Gold bullion refers to gold bullion bars and coins that trade at or near the gold price. If you simply want pure gold, be sure the price is affordable, the gold is genuine and tested, and you aren't overpaying for collector's coins. Be prepared to walk away if these standards aren't met, especially if an online company. Once you've purchased gold, you must store it properly. It's possible to keep it at home, however, this may raise security worries. If you decide to acquire it and keep it at home, make sure you have sufficiently safe and take the necessary security procedures. 2. Invest in gold futures. Futures contracts are standardized contracts traded on a controlled exchange. They allow a holder to buy or sell an underlying at a price determined by the futures contract at a future date. To get started, you'll need to open a brokerage account. 3. Invest in gold ETFs. Gold ETFs are an alternative to gold futures, if you don't want to invest in gold futures. Rather than owning futures contracts and paying attention to the maintenance margin, you can get exposure to gold by acquiring shares of ETFs. 4. Invest in gold mining companies. Gold mining companies provide exposure to the gold, though it is often limited. These companies are exposed to operational risks, which could result in a break in the gold price connection. Regardless of the price of gold, gold miners are at risk of default, and their shares could lose value if the company has an operating problem. Thank you for watching this video. Please don't forget to like, comment, and subscribe.